Good evening, everybody. It's Max Convexity. I hope everyone's having a great evening tonight. I wanted to do a little special edition of the Daily Covered Caller. Let's look here at this thing, the buffer report. It's a great, huge day for the indexes. Look at YMAG outperforming its benchmark. Benchmark is in red, high yield fund is in blue. But all of these did great. Look at the new Curve Fund KQQQ performed right up with this benchmark, as did FEPI. All the usual suspects. Look at this one, Triple QT. All hell, Triple QT almost outperformed Q or KQQQ. Anyway, YMAG was the big winner just on a 1 day basis, but man, ULTY had a great, big, gigantic day. Nice job, ULTY. They also have some big down days, of course, but when they hit it big, they hit it big. Now, over here on the right, we had some underperformers. These are, here's some fixed income over here. Actually, high outperformed its benchmark. TLTW did well, underperformed a little bit. Some of these other ones these are ones I don't talk about much or follow that much. Clip. They all had good days. They all made like 1%. I mean, that's a great problem to have. IVVW, that's which one's that one? The iShares covered call. I mean, holy cow, great problem to have. The one I like, the ones I always talk about are this one right here, which Triple QY, which actually did not have a great day, but there's a reason there's a reason it didn't have a great day, or there's a reason it didn't have it's not as high powered as the other ones on these big up days. It's made for more cushion on the downside, of course. But I always talk about JEPQ as well. I always talk about FEPI. I was wearing a FEPI shirt in this morning's update. I took it off before my Howard interview. I didn't want to do an interview with Howard with the FEPI shirt on. Anyway, it's a great big day for the indexes, big day for everything. Let's look right here. Look at NVIDIA up 12%. I mean, that's insane. NVIDIA also up 12%. Look at this chart. These guys, for the pairs trade, you want to be somebody that's playing the pairs trade, which is NVDY for the bullish yield fund and DIPS for the bearish yield fund, wants the price to be right about where it closed, about 117. You want it to be between all the strikes. Usually there's a big area, a bigger area to aim for. Let's look. There's only 3 of these funds that have inverse funds also. This is one of them, though. The yellow boxes belong to Coney, CONY, bullish high yield fund. Red boxes belong to Tony Fiat, FIAT. So they both trade options on Coinbase. Fiat trades covered puts. They do a synthetic short and a covered put strategy, and of course, Coney does a synthetic long and with a covered call strategy. Anyway, so if you're playing both of them, which some people are, you want the price to be right between, which is great. If you're playing just the bullish side, you want the price to end up on Friday, ideally, right up here at the top line of the profit box. Now, some of these guys use multiple strikes, but all right. NVIDIA, we've already looked at that one. Let's look at this one. This is the same situation. Tesla is the yellow profit boxes. The red profit boxes are crash, which is the inverse covered put strategy. If you're playing both, you want the price to be in between. If it is no longer in between, the managers can adjust and can roll out the option positions. But right now, it's basically in between. It's close enough. At least it's not. At least all of the Tesla strikes aren't in the money like they were for like 3 weeks in a row. Right here, starting here on June 26th, and all the way going into the first week of July, they were capped out all the way to like the 10th, and then they finally started writing calls that were far enough out of the money that they quit being capped out on the upside. But that happens sometimes in covered call strategies. All right, let's look at Mr. All right, these guys look good. All right, well, let's look real quick at the Defiance profit boxes, and they just blew out there. I mean, heck, all they needed to finish, they needed the NASDAQ to be above 18,950 for a full profit, and they finished way up here. That's a great day. This was a historic day, too. If you saw my update this morning, but this chart looks the same. We'll look at Russell real quick. Now let's check out. Actually, that one didn't finish at a full profit. The market Russell sold off a little bit right at the end of the day. I didn't notice that yet. This USO looks good. This bodes well for the U.S. oil fund, and they sold two calls that, they sold two calls and that expire Friday. Or no, I'm sorry, they expired today. Anyway, so I'm sorry. Gosh, I'm bad. They sold puts. They sold two puts. They sold this one. They sold the 76, and they also sold the 77. Yeah. But when you're selling the put, you want the price to be at the top line or above. And the top line is the strike price. So you really want the price to be above 77, which it was at the close of business day. So both of these puts should have expired worthless, which is what you want when you're selling them. All right. So now let's do this. Let's go back to this. Let's go back to the buffer report. All right, up here at the top, I put FEPI, and then I put what its underlying asset, reference asset is. So FEPI was up 2.53 points a day, whereas the NASDAQ index was up 3.01. Well, and then I take a difference, and I hang on. All right, I take a difference and I color code this, and the lighter colors are better. The lighter colors are tracking their underlying better. So the lighter the colored is the better. Okay. So anyway, so look, so FEPI, iSpy, KQQQ are doing a great job. Triple QT is doing a good job. So let's go look at the chart. See, I just made a different way of expressing it. So anything in a light color down here, GPIQ, Triple QI is doing well. They're catching, the vast majority of the parent assets upside. Now, some of them in the darker ones aren't doing so well. Like let's look at Clip. We were just talking about KLIP. It's the one that sells calls on KWeb. And I don't have anything against it, but it's just an example of day one that is leaving some money on the table versus the parent. Now, these are covered calls. They're designed to leave money on the table. They're trading future upside for current income. So I understand that, but some of them run a little more efficiently than others, and that's what the buffer report tries to study. But on a day by day basis, that this is not that useful of information. It's just fun to look at. But I just wanted to see today because the underlines were up so much. Hell, I mean, look at the SPX is up 1.5 today, and the Nasdaq was up 3 points. So I wanted to see a lot of these funds cost a lot of money. They're charging a 1% management fee. So, but on a day like today, you can really see which ones are the high powered ones, which ones can really take advantage of a bullish market. Not that that's the only thing to worry about, but I mean, it's just something to factor in. Anyway, you could see it, it's YMAG today anyway, KQQQ, FEPI, iSpy, SPY-I, and it changes day to day, but QQQI, which is a stable mate to SPY-I, and that's a really nice fund. Look at IWMY outperforming its parent, GPIX. Anyway, like I say, we could see it two different ways now. We can, if you want to look at your exact, the exact performance, we can look at it here. If you have some, ULTY, well, ULTY was up 2.25, whereas the parent asset, which I'm calling Russell, ULTY doesn't really have an index that it follows, but Russell's the most volatile. I think Russell's a pretty decent comparison. Whenever something is an index but doesn't follow an index like ULTY, I'll either use Russell or NASDAQ. And if it's a tech thing like FEPI, they're obviously tech and communications. I just use their indexes, their underline is NASDAQ. But for ULTY, when they're just trying to go for the most volatile, stocks possible, I think it's more appropriate to use Russell because Russell is the most volatile of the three indexes. In any event, so that's the way I did that. But the other ones, and lots of them, like this one, FTHI, that's one I barely talk about. It's a company called First Trust, and they do covered calls on the S&P. So, but there it is. But they were kind of one of the underperformers. But like I say, the ones I always talk about were under, JEPY is a great fund, but it was an underperformer. But as was JEPI. I mean, and I'm talking a relative underperformer. So anyway, I'll do a better job about showing this every day. We'll start, and I'll try to make this better, but try to make the buffer report better. But I just wanted to show everyone how things are doing. Now let's look at the 24-hour chart, see if the market's still going up or, what we're doing right now at this hour. And also the bonds, the bonds are moving. Rates are dropping like crazy. So that means rates and prices in bonds are inverse. So that means prices are going up if rates are going down. And that's what's happening. And that happened after Powell came out and started speaking. But the 24-hour futures, here's Russell. Now, Russell's actually not really blowing up. It blew up this morning, or it actually blew up at 1 o'clock and then 2 o'clock. It did blow up a little bit, but then it settled back down and it's chopping. But NASDAQ tells a different story. And it's still going up after hours. The market closed right here at 19,573. Now we're trading 100 handles higher at 19,670, or 96 handles higher, 97 handles higher. My gosh, this thing is on fire. Well, we'll see if it keeps going. I mean, you guys know I'm not super bullish, but maybe we sold off enough for now, and maybe we're going to bounce or something. I mean, that's obviously, there's no maybe about it. We are bouncing. We definitely are bouncing. So maybe that's in the cards. Let's zoom out here and let's look at a daily chart and see what's going on. Okay, well, I mean, on the daily chart, this to me it just looks like a bounce that's a good setup for another place to sell. I just don't think we're through selling. I don't know. I don't think we're through selling, but maybe I'm wrong. We shall see. We definitely came roaring back today, and we're still blowing up overnight. So maybe we have another day in this tomorrow. Maybe we'll go up to the middle line of this Bollinger Band, but then, in there, I'm still saying that might be a good place to look for a short. If you're a trader, just like and you're bearish like me, lots of times when you do get into kind of a down market phase, you'll get face ripping up days like today, but there's usually just a good chance to buy puts for the following week or something. That happens when you get into bear markets. Now, we aren't in a bear market yet. We've just pulled back like 5%. I mean, it's nothing. All right. I'll stop exaggerating. All right. Well, I guess that's all I got for you guys tonight. I just wanted to show you the new buffer report, or just the fact that I at least have the buffer report. And I just thought it was interesting to see which ones of these funds are blowing up. But I know this isn't a complete list. I need to make a separate chart for every subgenre, one for SPX, one for NASDAQ. But anyway, for now, this will have to do. So, all right, guys, I appreciate y'all for being here. Go watch my Howard interview if you haven't seen it yet. I talked to him today. That's a really good fund that he's running, and it's a different type of fund. It's not really a high yield fund per se. It's kind of like a medium yield fund that's going to have tons of growth and is going to be actively managed, and is a really cool idea. But anyway, definitely go check it out. All right, guys, take it easy.